one fund. On point for today, the expert to talk about it. This is the ETF of the Week. Welcome to the ETF of the Week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth, the head of research at VettaFi. And at VettaFi.com, you will find all the tools and research you need to be a savvier, smarter investor in ETFs. Todd, happy 4th of July. Great to chat with you again.
Happy 4th of July to you, Chuck. I'm excited to be here and to celebrate this holiday with you.
Your ETF of the week is
the Invesco S&P 500 Quality ETF, SPHQ.
The Invesco S&P Quality ETF, S&P 500 Quality ETF, SPHQ. So July 4th, it's all about the greatness of the country. Quality, that's kind of a theme. Is that the reason?
You're right. So the S&P 500 is the granddaddy of the U.S. equity benchmarks that are tied to ETFs. And then the quality companies within, these are companies that have the strongest balance sheets, consistent earnings records. These are companies that are well positioned to withstand the next 200 plus years of our country, probably even more than that. And that's why we think this is a great ETF to focus on. And it's doing quite well. It's actually outperforming the broader S&P 500. It's seen inflows. There's a lot of things to like about SPHQ.
Quality has become a theme, a factor, if you will, the same way that investing for growth or value has been, et cetera. But quality is also in the eye of the beholder. So with this fund, what are they doing to determine quality? And I think most people think S&P 500, if you're in there, you got to be a decent company. So how many of those decent companies are quality companies?
So let me cover a few of those questions. SPHQ holds about 100 stocks, so it's 1/5 of the broader S&P 500. You're right. The S&P 500 is large cap companies that have already strong enough earnings and strong enough characteristics to make it into the S&P 500. So this is the cream of the crop. These are companies that have the strongest balance sheets. These are companies that have consistent earnings in order to make it in, and the strongest of those earnings. So a company like Visa, for example, or Broadcom, those are a couple of the larger holdings. Procter & Gamble is a top 10 holding. I would probably think of that as among the bluest of blue chips. Johnson & Johnson is within the portfolio. I'm drinking a Coke, coincidentally, because it's part of the portfolio as well. These are the companies you would think of as high quality blue chip companies. And then what's great about this is that the index behind the ETF SPHQ, you get a rebalance. It gets reconstituted a couple of times throughout the year to make sure that these companies are the best of the best.
Well, there's a few names that you left out because, NVIDIA is the largest holding of this fund. Alphabet's in there, Microsoft's in there, Apple's in there, but it's not weighted the S&P 500 way because Broadcom's in there and MasterCard's in there in the top couple of holdings. So explain a little bit about how this fund does weight things.
Yeah, so you're right. It's not constructed from a market cap weighted basis. It's constructed based on quality. So there are companies that are going to rise based on in between the periods of rebalance. And as such, you're going to see some deviations. Companies are not weighted the same way in the beginning of that rebalance period and towards the middle and the end of it. But you're right. NVIDIA has climbed within the S&P 500. Apple and Microsoft, those three companies were neck and neck as at the time that we were recording this in terms of the largest companies. You're going to get broader diversification with SPHQ than you would through an S&P 500 market cap weighted ETF from iShares or Vanguard or State Street. So this, for many people, could be a core replacement. Instead of having the S&P 500 on its own as your U.S. equity large cap exposure, we're finding many advisors are looking at an ETF like this, SPHQ, to get your core equity exposure, but with a tilt towards those highest quality companies.
Now, it's really interesting that this fund holds 100 stocks, and you just said you'll be more diversified here than you would be with a traditional or classic S&P 500 fund, and that's because of the weighting. Obviously, 500 stocks more than 100 stocks, but the weighting being so different because it's not weighted by market capitalization. That's one interesting side of this. I have another. When we talk about quality, and again, it's a big factor and it could be there, is the other side of this that it cuts it off at 100. In other words, could I be looking at other ETFs and say, yes, we're into quality, but they're picking 200 because you could get 200 quality names. Is this also benefiting from not really tight concentration, but enough concentration that you see the quality really shine through?
Yes. So I think that you want to focus on the top. When you're looking at a factor, you want to make sure you're getting exposure to that factor and make sure that you're getting only the companies that rise to the top. There are certainly oriented ETFs that are relative. They're looking at quality, or they're looking at value, or other factors from a relative stance. So the best of the companies within a certain sector, the best of the companies within a broader index, but the bar is not raised as high. With SPHQ, you're not having to be constrained by an individual sector. So for example, there's a lot less energy companies than you'd find within the broader market. And that we think is a good thing. It's going towards where the highest quality companies happen to be. You name some of them, those are household names. You're likely to know every company that you'd find within this portfolio of SPHQ because these are the best of the best companies. And we think that helps to position this ETF for the second half of the year and to survive any volatility that we see heading into the election and anything else. And I'll have a hot dog with some mustard on it at your barbecue.
Well, my father would have loved this fund because he always said he loved funds where he could look through and recognize every name. And you could indeed pretty much recognize every name here. You said this could be a core replacement. Is this also a case where somebody who's got a good core might want to say, let me split it in two and say, I've got the broad market covered, and then I'm tightening my focus on quality with these names?
Yes. So you could certainly tilt towards quality instead of going all of your U.S. large cap equity exposure into SPHQ and tilt it. So again, I don't recommend people sell ETFs just for the sake of selling them, because you're going to incur capital gains in all likelihood, given how strong the market has been for the foreseeable, for the longer term. So we think people certainly want to be thinking about how they can complement an existing strategy with any new ETF. And SPHQ is going to hold the companies you would have within an iShares Vanguard or State Street S&P 500 ETF, but screen and filter out those less quality companies and only the best of the best. So this SPHQ ETF could pair very well with your broader ETF. So add a sausage along with my hot dog, Chuck.
There you go. So quality foods, quality companies, quality ETF as we celebrate the qualities of the United States as we get into the July 4th holiday. It is SPHQ, the Invesco S&P 500 quality ETF, the ETF of the week from Todd Rosenbluth at VettaFi. Todd, enjoy the dog and the sausage and anything else, and we'll see you after the holiday.
You have a good one too.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And yep, I'm Chuck Jaffe, and I'd love it if you check out my show at moneylifeshow.com or by going to wherever you look for great podcasts. And if you're looking for great information on exchange-traded funds, make sure you include VettaFi.com in your search. At VettaFi, they've got all the tools you need to be a better investor in ETFs. They're on Twitter or X at Vetta_Fi. And Todd Rosenbluth, their head of research, my guest, he's on Twitter too. He is at Todd Rosenbluth. The ETF of the week is here for you every Thursday. We'd love it if you'd follow along to make sure you don't miss an episode. And until next week, well, happy holidays, everybody, and happy investing.